Hi everyone, my name is Olga Afanasyeva, and this is the VC chat room that is powered by me and my colleague Olga Stoliarchuk. And I'm reminding that this is the so-called real-time vlogs when we have the professional for venture capital industry. And the peculiarity is that you can ask the question yourself, like writing here in the comments in Zoom or on Facebook Live. And today's guest is the colleague of mine and well, a friend of mine, Vikram Gupta. Hi, Vikram.
Hi, how are you, Olga? Thanks for having
Hi.
me.
I'm fine, and I'm super happy that you have had a chance to join during this busy, like Zoom carousel for everyone, probably. So I'm sure that like many people who joined us today and who will join us know you, but like as a short introduction, Vikram is the founding member and managing partner of IvyCap Ventures. And he has more than 22 years experience in private equity, business consulting, M&A, strategy and operations in healthcare, life science, education, consumer goods, and many other industries. He was also the entrepreneur himself before founding the IvyCap, and he was also working in the US with IBM Business Consulting Services for over 4 years in strategy and planning, business development, and project management. So, hi again, Vikram.
Thank you
And
so much for
thank you.
just background and thanks a lot for having me here.
We will talk more about your experience during the course of the question. And like, just to warm up, tell me, how did your like daily routine had changed currently? Like, how does it look like? And like, considering that your work is kind of international and all over India in particular, you definitely have had a lot of calls before the coronavirus on Zoom and like interacting with many people. So did it really change, and what is your routine now?
So, that's a very interesting question. And, in December last year, I was in Beijing. In January, I was in, of course, in Davos. And then I was for a week in Tokyo. And then I was for a week in Singapore. So a lot of travel was happening, pre-corona. And in fact, part of it had started, I guess, around November, December in China. And fortunately, people tell me that you've been to all these places all this while, and everything is fine. So I feel very fortunate that everything was all right. I've been traveling quite a lot, and of course. There were lots of meetings, face-to-face meetings, meeting lots of entrepreneurs, meeting lots of investors. And come March, mid of March, things completely changed. We shut down our office on March 16th. And since then, all of us started working from home. Life has changed quite substantially, but I think there are some very interesting changes that I have personally noticed. One is, I've realized that working from home is actually quite interesting, where you get to interact with people who you otherwise been trying to meet for a while. And I've seen the productivity gone up quite a bit. Our investments have not stopped. We've actually announced 2 deals in the last 6 weeks. And our fundraising activities also continue. We continue to interact with investors over Zoom calls like these. So, otherwise, work-wise, things are going as usual. I'm getting more time with my family as well. Get to spend a lot of time with family in terms of lots of activities that we do: play games, exercise, watch movies, compose music, sing together. So lots of things we are doing together. So I think that these are all positive things which have happened in the last 7 to 8 weeks, I would say.
Yeah, I think that some changes are really good for our lives. Like, for example, me too. I had started having more sport in my daily routine, and
Right.
like really interacting and calling my parents more often, and definitely seeing the husband. So yeah, there are some positive things indeed. And talking about your venture funding activity, like for many investors currently in the world, and like as the CEO of Ukrainian Venture Capital and Private Equity Association, I interact with many funds, with many angel investors all over the world. So for most of them, the main focus currently is on actually like helping the portfolio companies, for helping those who are already like invested by this fund or the angel investor. So they're not really looking very actively at the new companies to invest, but from what I have seen, like from IvyCap activity, from what you have done, is like you had a really like great announcement the last weeks. Yeah, you had you had invested with Sequoia Capital like $4 million into one of the Indian startups, and before that you had a big deal announced. So how is in that sense, how did this situation influence the fund activity? I mean, on investing side, and what would be the focus like the next time?
Yeah, so there is a very natural shift towards spending much more time with the portfolio companies. We have a portfolio of about 20 companies, and this portfolio is quite diverse. We have companies in consumer tech space, in healthcare, in B2B SaaS businesses, also in few other sectors, including food tech. And what we realized that during these times, it's really important to spend a lot of time with your own portfolio companies to make sure whatever support they need, they should get. As you know, our fund is anchored by the IIT Alumni Trust. We have a large pool of the alumni of the IITs around the world who have supported us as investors and also as mentors. And in such times, it becomes even more visible in terms of how actively you get that support from that ecosystem. And we are quite fortunate, I would say, that people from around our ecosystem have actually very actively come forward and supported us in our portfolio, whether it's on technology front or helping in terms of thinking through how to manage costs. Because one of the biggest issues right now is how do you manage your costs? Because I think the biggest challenge, everybody's facing the same pressure in terms of the revenues. The revenues have dropped quite substantially in almost all the companies, especially in the month of April. There was a lockdown all over the place. So, irrespective of your business model, the revenues, were very low. Even though the companies were receiving orders, for example, even a company like a jewelry company that we have in our portfolio, Bluestone, which is an online, offline jewelry company, we kind of thought that, in this kind of a time, people would be focused more on buying essentials. But we kept, seeing orders coming every day, even for jewelry, online jewelry. So it's a different thing that you can't really service those orders because it's not considered as an essential item. So you can't have your manufacturing set up on, you can't have your delivery people. But on the other hand, there are companies which are in the essential space. For example, we have a company called PharmaRack, which is connecting pharma companies with the distributors and with the pharmacies. And here they actually were substantially benefited because of the situation. Various state governments in India actually mandated pharmacies to buy through PharmaRack because of the fear of fake drugs increasing in such times, etc. So of course, companies like PharmaRack would have benefited a lot. Similarly, companies like Biryani by Kilo, which is a food tech company with the cloud kitchen model. People would have thought that, will people really order from outside? They actually continue to, deliver, and food is an essential item. And each of these companies have very specific problems and issues, and you have to make sure that you work very closely with your founders to really help them solve these problems. And majority of these problems are related to manpower issues, salary issues, paying your bills on time, and irrespective of whether your revenues have dropped or not, you have to continue to pay your salaries. And I think the other issue which you have to make sure is every company is well funded. If there was a company which was going to the market to raise capital just before COVID, then how do they make sure that they continue to have enough cash balance to stay on for at least 12 to 18 months, because that's the kind of time frame you need to really stay alive. And I think fortunately for us in our portfolio, we didn't have too much of an issue, because most of our companies have a profitability mindset, and that's how we've invested. Our investment criteria is actually based on the unit economics and how the founders think about the profitability. Even if they're not profitable, can they become profitable in times like these? And we are quite fortunate that most of our companies were quite nimble in immediately changing things wherever required to cut down their costs and sustain in these times. So that's basically how things have been going on, and how I have been personally spending my time. The last 7 weeks, I would say, multiple meetings with our portfolio companies, going through very deep issues, and even substantially changing or modifying the business plans where required.
Yeah, something that we all did not expect, like, at all. Thank you for sharing that. And have there been cases, like, for example, you were looking at the companies and you were planning to have a deal with them, but then the situation with COVID, with the global outbreak, or stop this deal or postpone the negotiation with this or that startup? Did you have such cases, or it was more or less smooth for that activity?
You mean in terms of making new investments, you mean?
Yeah, the new investment.
Yeah, so I think there has been a substantial change in terms of outlook towards certain sectors. So, for example, if you were talking to companies who were scaling up in travel and hospitality sectors, and some of them we were talking to quite actively. Unfortunately, we don't have a company in that sector. Of course, in the new scenario, it didn't make sense to continue discussions with them with the existing models. Similarly, there were a few other companies like that, which are quite actively or deeply impacted, I would say, in that sense. And there has been also a positive change in a few other cases. For example, if you were talking to somebody who is in the areas of robotics or artificial intelligence, machine learning, IoT, it's anybody using sensors for remote monitoring and things like those. We have expedited those discussions during this time. Anybody who was in the healthcare space or health tech in general, we have become even more active with such companies. So we're looking at broadly in a 2x2 matrix. If you look at supply side on the y-axis and demand side on the x-axis, you will see there are certain sectors which are in the high supply, high demand quadrant in that, which are specifically, health tech, edutech, even fintech in certain cases, and anything related to deep tech technology companies would fall in that quadrant. In low demand, low supply quadrant, you'll have companies which are, uh, travel and tourism, hospitality, and many touch and feel services businesses, and also certain kinds of retail outlets which are, only offline retail outlets, cinema halls, for example. I think those are in that quadrant. So one has to look at from that perspective, and we've actually started evaluating different industry sectors based on which quadrant they fall into. And of course, there is a large demand for investing in that first quadrant I talked about. But at the same time, there are even other investors looking at the same sectors, right? So there are some kind of an adjustments in terms of the companies coming into that sector, and the investors wanting to invest in that sector.
Yeah, yeah. Thank you. You've mentioned that, and maybe we could talk a little bit more about the fact that what is interesting about your fund in particular is, apart from all the things, is that partly it's funded by the endowments of the alumni from the IIT University, who support the industry in that way. So did this support change like in the course of the outbreak time? Did they start to support more, or they considering to provide like more capital, like to support the industry through the funds, for example? Do you see this kind of influence in this type of relations?
Yes, so the biggest support that comes from that ecosystem is the support of intellectual capital and access to networks. There are about 400,000 alumni of about 29 IIT campuses which are there in India. And they are across the world. Almost 10% of the IIT alumni live in the Bay Area. And, a very similar number you will see in the Indian Silicon Valley, which is Bangalore. Interestingly, if you look at the unicorns in India, so there are about 32, 33 plus minus unicorns in India, which are reached more than $1 billion valuations, and this is pre-COVID I'm talking about. Almost 22, 23 out of them, so which is like 2/3, actually come from, or the entrepreneurs come from the IIT backgrounds. And even if you look at the data globally, you rank the number of unicorns based on the background of the entrepreneurs. That's quite interesting statistics. The number of unicorns founded by the IIT alumni actually ranks 4th globally. So this statistics tells you something about the quality of entrepreneurial talents which is sitting in this ecosystem. So we are quite fortunate that as a fund, we have extensive support from this ecosystem. We have a core set of people, which is a small subset of people, which is about 65 people, who are our mentors, who very actively get involved with the portfolio companies hands-on. In addition to that, we have about 5,000 alumni who are available to us on need basis, and they're spread across different geographies, across different sectors, different technology areas, and therefore, not only when we are looking to invest in certain areas, these people would bring us opportunities, but once we've invested in these companies, we will get a lot of hands-on support, and this support is typically required in terms of, filling up of any senior leadership positions, If somebody's working on a product, they need support in terms of some technology, and then there'll be somebody from the alumni ecosystem who would say, hey, this here is somebody who I know who can really contribute to further work on this technology, or they've done something similar, or somebody is looking for access to the customers. If you're selling a product from India to the US, you have a huge network over there. So it's actually very interesting model. And in our case, the way we have created this and structured this, we've said that a significant part of our profits, which is typically which comes to the fund manager. In our case, almost 25% of our carry of Fund One, for example, has already been committed as endowment to the IITs, and which is we believe is going to be a substantial amount. And going by that kind of a mindset, when we looked at the IITs themselves, and India actually did not have a structured endowment platform across any university, just like in the US. You have Harvard endowments, you have Yale endowments, Princeton endowments, which are pretty sizable. Harvard is about $35 billion. Yale is about $25 billion and growing at almost 18% every year. India doesn't have any such endowments, or did not have, at least before we created the first endowment fund for IIT Delhi, which was announced by the President of India last year in October, which is partly seeded by Give Back, coming from a venture capital fund. And I think that integration of Give Back with this entire ecosystem actually creates a lot of support system for us, which is otherwise not available to funds, in general. And we've seen this actually, the actual support on the ground, whether it was a Fund One or Fund Two, or now, we're going to a Fund Three, and we're already seeing a substantial support, even going into a Fund Three, where, for example, our alumni in Japan is already proactively supporting us in connecting with large number of institutional investors and even individual investors who are very keen to invest in our fund. So I think I would say this model has actually proven its value, and we are very blessed to have this network support.
Yeah, that's very valuable, not only in terms of the capital, but in terms of the expertise and the connections that are opening in the case of such model. That's great. And how do you anticipate, you partly covered this question, but still, like, how do you anticipate the fundraising for venture capital funds? Maybe some of the advices on what should the fund managers, like maybe not first-time fund managers, focus on in this post-COVID-19 world?
Yeah, so that's a very, very important question. In fact, we've been talking to very actively to quite a few investors. And of course, we've been even more actively engaging with our existing LPs, which are primarily the Indian institutional investors. We have over 20 Indian institutions as our investors. The largest banks and insurance companies in India are our investors. But we've been talking to investors in Singapore, in Hong Kong, Japan, even in the US, even Middle East, and very interesting, mindset we are noticing, and very interesting kind of situation emerging. One is we are not seeing that people are slowing down. I mean, of course, there's a slowdown in general. People are becoming more cautious, but I think people are still looking for good investment opportunities in general. But at the same time, they become more cautious. First-time fund managers are going to have a harder time. I think, if there was money earlier coming for the first-time managers, I think if you are the first-time manager in this time, I think it's going to become harder. If you are, a second or third-time fund manager, I think there is definitely opportunity, but at the same time, your performance is going to matter even more. How's your portfolio? How has your portfolio performed? And your portfolio is going to be stress tested for this particular situation. And how you are engaging with your portfolio. Are you really spending time with your portfolio? Lots of these questions are going to be asked, which people are asking. How do you react to a situation like this? How do you engage with the LPs in a situation like this? Because typically there's a lot of gap between the understanding of people, and they assume lots of things, and unless you are communicating with them on a regular basis, it becomes very challenging. People assume on their own that things are going bad, and therefore they start making decisions based on that. As long as you're doing all that, you're ensuring that your value is protected. You would find interest from investors wanting to put in their capital with you. But yeah, it's not easy. Many LPs have taken a wait and watch approach. So it might be a good time to really, build that relationship stronger. I think many people might think that, okay, this is a time when, investors are not going to look at your proposal, but I think this is the best time to really engage with your potential investors and really showcase to them your investing style, your skills, your communication methods, and lots of things. And I think when the market opens up, I think if you've really done a good job during this time, you have those investors.
Yeah, that's true. Maybe one of the skills that would be valuable is, like, to a certain extent, predicting the future skills. So thank you for sharing your thoughts. So now will be the last question from me, and I'm encouraging our friends for watching us. Please, you can write your questions in the Q&A sessions below, and as well in the chat. If you're watching us on Facebook Live, you can ask your questions over there, and we'll get back to it. So, and the last question is that I love reading books, and I believe that the real leader is their reader. So which book would you recommend to our listeners? Maybe with regards to the current situation, or like something that impressing you and you would like to share and, like, encourage people to read this particular book.
Yeah, so I think I do believe very strongly in the Warren Buffett's philosophy of really identifying these kind of time or situations as real opportunistic times. So of course, one definitely. If you haven't read the Warren Buffett Way book by Robert Hackstrom, that could be a book definitely worth reading. If you are looking to learn about venture capital in general, there's a book called Zero Gravity by Steve Harmon. That's a good book. And of course, one of my favorite books is on Steve Jobs by Walter Isaacson. These are the kind of books which I would say, if you haven't read these books, you should definitely lay your hands on these books.
Great, thank you. We will share them under the video when it will be uploaded on YouTube, so everyone can, check on them and read. And now I'm turning to the audience questions. Feel free to write. I see that some of more questions are coming. So pre-sent was the following question. Very interesting. So, should investments be made over Zoom calls? Here, I'd like to elaborate a little bit. Do you anticipate that there will be some changes in fundraising for startups, for like the founders of startups, after this outbreak? I mean, or this is just temporary situation and the world will get back on track? or really like are are like raising investments on Zoom is a real situation? What do you think about that?
This unfortunately, this fear of this virus is not going to go away until the uh, vaccine is, a real solution is found through a vaccine which actually works. I'm given to understand that there are 134 vaccine candidates which have crossed the IND stage, so the investigation new drug stage, which are on the WHO site. And I think there are another about 200 candidates which are in the works. Everybody's hoping that you have a vaccine solution sooner than later. I think that's going to be the main solution. But I think in the meantime, I think we are all going to live in this fear, and therefore people are going to continue to follow this physical distancing norms, and there will be these zones, red, orange, green zones, and of course based on that economic activities will happen across these areas. So I think it's going to be a phased approach in the bigger picture scenario, and I think it will take, in my view, to be completely back to the original scenario, to take probably about 2 years from what it was earlier. But I think during this time, for investors like us, since we are longer term investors, our typical investment horizon is 4 to 5 years at least. We would look for those opportunities which will really scale up during these times. There will be new kinds of unicorns which will emerge, especially in the technology areas. So we will continue to look for good opportunities, and even if we have to do investment through Zoom calls. I think, of course, there is always a face-to-face meeting aspect to feeling comfortable about the entrepreneurs. But I think, given our investing approach, where we have a large network of support system that I talked about, there are multiple ways to do reference checks on the founders, and depending on who else has invested in these companies and who else is recommending these entrepreneurs, and as long as you kind of see their expressions on Zoom and you understand how they're going to work, I think investments will happen through Zoom calls. So overall, I'm saying, from VC perspective, things will happen. Will continue to happen.
Yeah. So the last time we met, it was in Davos alongside the World Economic Forum, and like this year, as the previous ones, was full of discussions on like sustainability, on reaching the like social goals. So we have the question like similar about that. How does the investment scenario look like for post-COVID startups that are into social sectors? Do you think it will be harder for them, or otherwise people will understand the necessity of like keeping social up to date and supporting?
That's a very, very important and timely question. In fact, our Fund 3, we are going to build it around the SDG, framework. So, social development goals, which, in the last Davos, everybody was talking about SDG framework. And I think there is going to be a new norm of looking at everything with the social development goals angle. And I think very clearly there are 17 goals and 169 targets, which have been well researched, and there is a specific impact of each goal. What we've decided to do is, look at those goals and put a wrapper around our existing investment philosophy. We'll continue to have as the first filter based on the criteria that we already have. And on top of that, we're going to apply the social development goals filter, which is actually going to look at monitoring your progress on these goals And it's not just what is your absolute value on these goals today, but how you will progress on these goals over a period of time. So that said, to your specific question in terms of will the social impact focused companies, will they have better acceptance in terms of fundraising? I would say definitely yes. There is a much higher likelihood of people, corporates on one side, allocating their corporate social responsibility budgets for investing in those entrepreneurs. Governments, on the other hand, trying to look for specific, companies which can support social goals. And I think that mindset is changing across the world. And I definitely believe that if your social impact business model is actually making a reasonable impact and it's a very visible impact, it definitely has much higher chance of getting funded in today's scenario.
Yeah, I agree with you. I think we will have last questions, though we have a lot of interesting asks from our audience. Maybe we can get back to them later, like in the more slow regime offline. And now the last question, also very interesting. Which tough decisions have you taken in the last 1 month, and what is the impact of those on your stakeholders? Did you had this necessity to make some tough decisions?
There are always situations where you have to make hard decisions, and I think most of those hard decisions are related to when it comes down to cost cutting, right? So when you have to cut costs, you have to look at various aspects of cost cutting, and especially when you look at the manpower, it becomes very, very hard to let those people go who are maybe not immediately required, but you really don't know. I mean, they might be required in future. So these are very hard decisions. But what we've done is we've tried to look at this through a pyramid structure. So we said, let's draw the manpower across different levels in the organizations, and the people at the lowest most level typically will find it the hardest to actually go and even sustain themselves. So our mandate to the companies, our portfolio companies especially, is that try not to cut their salaries as you go up that pyramid. See if you can, if people can come forward on their own to take salary cuts, and especially at the top of the pyramid, if there is a way to compensate those salary cuts through different ways, like stock options and other ways, where people could actually still be aligned with their long-term goals, but also aligned to making sure that in the short term you survive. So these are not easy decisions, because when you get down to the specifics, it becomes very hard to take these decisions. So I would say these decisions have been the toughest to take.
Yeah, thank you so much. We have a lot of questions. I think we could, when we will post this video on YouTube, we can provide the answers to some of them. Some of them were covered, so you can rewatch this session. And at this time, I want to thank you, Vikram, for the interesting discussion, for sharing your thoughts, insight, and perspective. I hope that inspired entrepreneurs and inspired fund managers or VCs wannabes to continue improving the state of the world, and to develop the industry. Thank you so much.
Thank you. I really appreciate it. And, as you mentioned, I think lots of these questions are quite interesting questions. And definitely, we can answer these questions maybe separately, as you said, right? I mean, so that's absolutely fine.
Yeah, I think we can. Yeah.
Yeah. No, I mean, some of these questions, are very interesting, and they're, very relevant questions. So I think it'll be interesting to cover those maybe separately.
Yeah, I will try to extract them from Zoom, and we'll think on how we will answer them, maybe on LinkedIn or on YouTube channel. Thank you so much. It was a very interesting conversation. I hope we will see each other soon in person,
Yeah.
in some like offline world, probably.
Yeah. I mean, I don't know when the travel is going to start again, but especially in the international world, travel is going to take, in my view, much longer, because even when the travel starts, I think the issue of going through the quarantining process when you land in a new country, unless you got your immunity done or your vaccination done, you're going to have a hard time. If you go for a 2-day meeting with a 14-day quarantining possibility, you would not want to travel.
Exactly, you're totally right. I hope the vaccine will be found out soon, maybe through one of the hackathons that are like taking place all over the world. Hopefully it will happen.
Yeah.
It was Vikram Gupta, the founder and the managing partner of IvyCap Ventures, and the VC chat room powered by Olga Afanasyeva and my soulmate Olga Stoliarchuk. See you soon later in our next issues, and follow us on YouTube, which will be launched very soon. Thank you. Bye-bye.
Thank you. Bye-bye.